Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational and multi-asset hedge fund. But like I repeated many times, we are proprietary in nature. By proprietary, I mean no third party. I repeat, no third party can invest capital in our fund. We trade in commodities, which is gold, silver, platinum, palladium, and base metals. But like I said that Treasury Consulting trade in CFDs, which is contract for differences. As simple as that. Many people write to me and say that what exactly is the trading structure of base metal? Guys, if you wanted to trade in base metals, then the finest marketplace is Chicago Mercantile Exchange. If I tell you the daily volume of Chicago Mercantile Exchange, then 99% of the people won't trust. In fact, I'm sure that 99% of the people who watching this video heard that there is something known as Chicago Mercantile Exchange. Name the currency, name the base metal, name the product which Chicago Mercantile Exchange is not trading. I know that London Metal Exchange, who is also as competitive as Chicago Mercantile Exchange, is giving enough competition to CME. But in the last 10 to 12 years, I have noticed that CME is maintaining a higher upper edge versus the LME. And the following are the points. Number one, CME regularly updates their website as far as the new information is concerned, as far as the market updates are concerned, as far as the energy, agriculture, petroleum products, currencies, and different things are concerned. On the contrary, I have noticed that London Metal Exchange also updating their website, but the speed at which CME updates is really exemplary and we should appreciate that. Very important thing about CME, which differentiates from LME, especially in the base metals, which could be tin, lead, copper, aluminum, or any other base metal, is the volatility and volume. Volatility and volume are two cousin brother or sisters, whatever you say. If there is volume, there is volatility. If there is volatility, there is volume. So these two cousin brothers always together. And I have noticed that the volume of CME, Chicago Mercantile Exchange, is very high in the base metal segment, which gives an opportunity of something which is known as the spread trading. So example, we have LME futures at CME. We have LME future, say lead futures at CME. We have lead futures at LSE. An intelligent person can create a spread between CME and LME. Yes, if he would like to take a risk of USD INR, then he can definitely involve MCX also into the loop. But having said that, I never trust MCX, let it be honest, because number one is the volume, number two is the pricing. Third important thing which I always love about Chicago Mercantile Exchange is the warehouse. If today you are taking the position of any base metal, then CME is having warehouse almost worldwide. They have warehouse in Asia, they have warehouse in Europe, they have in United States and different parts of the globe. So if you are taking a position and unfortunately if you are in losses or you do not wanted to commit on that position per se, in this regard you can take ahead with the delivery. So suppose you are taking a copper future example and unfortunately you end up in losses in copper. So you bought at 3.6 and unfortunately market went to 3.2. You end up four big figures and a huge lot size, you end up in a huge losses. So there is no need to demotivate yourself because you can easily go ahead and take the delivery of this copper, hold it in your warehouse or probably in your factory or maybe in your godown or wherever, and wait when the iron is hot. So when the iron would again be hot at 3.7 or 3.8 or 3.9, then you can sell this in the open market and you can make money out of it. This is the beauty of the CME. I'm not saying that LME, London Metal Exchange, do not have this beauty. Definitely they have this beauty. But what I always noticed is that when it comes to delivery settled future contract, guys, 99% people haven't heard there is something called delivery settled future contracts. If you open Google and type delivery settled future contracts, you will immediately see Chicago Mercantile Exchange name came at the top. This is the beauty. And very interesting thing which I have seen about Chicago Mercantile Exchange is the mini contracts, which means if your pocket, your books, your MTM do not allow you to take a big position or you feel that risk is little bit on a higher side, then you can take the mini contract like mini Standard and Poor contract, and there are variety of mini contract which CME is offering. I always believe that if you are a base metal trader, then you should understand CME very well. Having said that, there are other platforms also, but I really love the way CME